Emil Pastor, Solution Architect at Neo4j on getting started with graph data science.
Good day, everyone. Today we'll be talking about the fundamentals, getting started with Graph Data Science or GDS. My name is Emil Pastor. I'm a Senior Solutions Architect for Asia Pacific region with Neo4j. Today we'll be talking about four key things. What the heck is it? How do you do Graph Data Science? Who else is using GDS? And why you should care about Graph Data Science or GDS? If you think about it, once you have the connected data, it's not difficult to generate insights. I've seen a lot of customers build amazing knowledge graphs. And when you got your knowledge graphs in the magnitudes of tens of thousands or even 50s of thousands, and you're a domain expert, you know what you're looking for, right? You can use Cipher Query to help you find those local patterns. It is still humanly possible to analyze and make sense of it. But as time goes by, data grows. And as that grows, as your data grows, as you get more data, as you analyze huge amount of data that forms into millions or even billions of nodes and relationships, you'll start to drown. How do you make sense of it? You can't just analyze each and every node in the magnitudes of millions of to billions one by one. You need techniques to sift the data to find, let's say, the most important node or answer the question of what's unusual or what's going to happen next, right? And this is where graph data science shines. So what the heck is graph data science? If there's anything that I want you to remember in this session, it's this two slides, next two slides. Okay. Your data is meaningless without relationship. Even when using relational databases, you need to join tables to analyze and generate insights. If you just have those data points, those nouns or nodes of people, places, things, items, do they mean anything without connections? When you analyze data based on a single data point, let's say your customer, focusing solely on customer data is less meaningful compared to when you have interconnected data surrounding your customers, right? What product have they purchased historically? Which stores did they visit to make the purchase? What region those stores belong to? Who are the employees that help them? Having that interconnected information helps you answer much more complex questions. And the secret sauce of that is you represent or model your data as a graph. And graph treats relationship as first-class citizens, right? And speaking of relationship, you can use relationship to answer questions that you couldn't answer without graph. So, and that's the real bottom line of graph data science. It's using relationships and connections within your data to answer questions you can't answer otherwise. So the question before of which node is most important, right? You're not answering that based on, whether I like red more than blue, but how many relationships does it have or how is it connected? Some people think that graph data science is hard and you need, PhD or master's degree for you to understand it. All right. Not anymore, right? What you're seeing right now are the three key ingredients to do graph data science, right? The first one is queries, right? Data science, graph data science is about asking questions and formulating those queries. Let's say if you want to find the people connected to the fraudster 2 to 3 hops out, you know how to formulate that question and how you can look for that in your query and how to answer them using Cipher Query. All right. And as you get more and more data, you don't necessarily know what to look for. And this is where you need machine learning, right? You use techniques such as graph algorithms, feature engineering, and supervised machine learning to analyze data across your graph and to answer and find, let's say, the most important node at a global scale. And to tie all of those things together, your queries, your machine learning, you need visualization, right? Visualization will help you tell the story across multiple audiences. This is how you collaborate and how you get your stakeholders to think about, you know, what questions do they want to answer and the answer to their questions to make decisions, right? Now, let's look at, the journey of doing graph data science, right? All of the graph data science use cases or problems always starts with a knowledge graph, right? Knowledge graph enable domain experts to find patterns to know what they look for, right? The key word there is the patterns, local patterns. And once you build the knowledge graph, you can get more sophisticated, right? With the use of unsupervised machine learning to answer much more complicated questions, such as, finding any anomalies, right? Or trends based on, what's the most important in your node. You let the data speaks for itself, right? And then the highest form of doing graph data science is doing graph native machine learning. You use graph to predict how the graph will evolve or translate your graph into an embedding or representation that tabular machine learning understands so that you can integrate it within your own uh, tabular machine learning platforms. Okay. Now we've established that your data is connected, right? Data points cannot stand on its own, whether it's a data points of people, you need networks of people, of your employees, customers, suppliers, and understand how they interact with each other, right? Or even networks of transactions, right? To understand the risks based on the transactional behavior of your customer, or even within your supply chain, right? Finding the most optimal route, or even within your knowledge, right? How often uh, person A search for specific interests or category, right? Specific domain. Connect using connections, connecting all of those data is far, far, far more powerful than letting the data stand on its own. Right? And you use those questions to answer some of the most important questions. Let's say, for example, in the graphs of people, right? Who is the most important? Right? Who has the most connection? Who is the influencer? Or in the graphs of transactions, you know, what is the most likely to purchase by this customer? Or who else bought the same item, right? Or even what will happen next, right? What relationships will form over time based on historical data. Hence, graph data science answers those big questions, right? Like, what's the most important and influential in my business? See what customer cares about, right? The biggest impact on supply chain, unseen relationships or dependencies that is causing the most failure. Sometimes small things have the biggest impact, which graph algorithms reveal. Or even answering the question of what's going on that is unusual, right? Uncover anomalies, anti-patterns, and unexpected trends. Behavioral patterns changes all the time. So you need to continuously create a dynamic. It's just these three things. We have more than 65 graph algorithms available out of the box to answer different kinds of questions. Let's say, for example, if we want to analyze the most optimal route from Sydney to Melbourne through to Mumbai, can use pathfinding and search, right? Find the shortest path or the A star shortest path. Depending on the questions that you wanted to answer, we cater for those with this suite of algorithms. Big questions, right? Like, what's the most important and influential in my business? See what customer cares about, right? The biggest impact on supply chain, unseen relationships or dependencies that is causing the most failure. Sometimes small things have the biggest impact, which graph algorithms reveal. Or even answering the question of what's going on that is unusual, right? Uncover anomalies, anti-patterns, and unexpected trends. Behavioral patterns changes all the time. So you need to continuously create a dynamic graph analytics. Or even answer the question, what's going to happen next? Understand and anticipate the ripple effects. Improve predictions by adding behavioral and structural information to predictive models using graph-based machine learning. But traditional approaches to data make it impossible to reveal, right? Hence, connected data is powerful, and graph data science even make it much more powerful by being able to analyze huge amount of information at scale. So, how does Neo4j help me do graph data science? Right? If we looked into Neo4j as a graph data platform, right, you have your data sources that able to connect to Neo4j through various connectors. And you're able to deploy Neo4j across different suite, AWS, Google, Azure, self-hosted or on-premise, your choice. And then you have an option to use graph database alongside with graph data science, right? To be able to do machine learning to cater for across multiple personas of developers, scientists, business users, or data analysts, engineers, etc. Right? However, the key things here for graph data science is just these three things, right? You have your Neo4j database that allows you to persist your data natively as a graph, right? And be able to deliver and store data at an enterprise scale performance that's secure. And then coupled with that, you have the Neo4j Graph Data Science library that allows you to scalably execute graph algorithms on top of your Neo4j database. And to tie all of those things together, you have Neo4j Bloom to visualize those graphs, do some exploration, prototyping, etc. If you think about the Venn diagram that I showed a while ago, it nicely relates into queries through the Neo4j database, machine learning through the Neo4j Graph Data Science library, and through visualizations using Neo4j Bloom. Right. So let's focus on the Neo4j Graph Data Science library. And these are the three secret sauce on Neo4j Graph Data Science library. You have your graph data catalog that allows you to shape and transform your underlying data. You have your algorithms, graph algorithms to perform unsupervised machine learning, and your ML pipeline to use supervised machine learning to make graph predictions. So let's talk about each of these items one by one. So what's graph catalog, right? Graph catalog might be the most boring part of all of those three key elements, but this allows you to do graph data science at scales. We help you transform your underlying data source stored in Neo4j Graph database into a highly optimized, compressed, sparse row representation that's built for massively parallel data science workloads. Right? It's a single APIs that allows you to materialize projections. It allows you to pick and choose which specific nodes or relationship that you wanted to project, right? You want to create a subgraph of where you wanted to analyze your data using one of the graph data science algorithms or machine learning, right? It also allows you to do backup, restore, or export those projected graphs. Then after you store or project your graph into the graph catalog, right? Then you'll be able to use graph algorithms, right? We have 65 more than 65 graph algorithms available out of the box to answer different kinds of questions. Let's say, for example, if we want to analyze the most optimal route from Sydney to Melbourne through to Mumbai, can use path finding and search, right? Find the shortest path or the A star shortest path. Depending on the questions that you wanted to answer, we cater for those with this suite of algorithms. Or even finding the most important nodes. We keep talking about finding the most important nodes, but how shall we make it happen, right? Or how do we make it happen? That's the centrality algorithms, right? You can use degree centrality or PageRank or any of these algorithms to find the most important node. Whether you use weight, unweighted, how's the orientation of the direction of the relationship, it's completely up to you. You have the choice, right, to configure based on the types of questions that you wanted to be answered. And then we also have community detection. If you wanted to do segmentations of your customers or transactions or do clustering, right? You can, or even finding, what's unusual based on the interconnections of your data or finding, which one is odd one out with, weakly connected components, Louvain, label propagation, triangle count. Or even using heuristic label propagation, right? This is using rules-based to find and suggest, let's say, for example, since you've been interacting with this person, you probably wanted to interact with person B and person C as well, right? That's all rules-based. And then you have similarity to find similar nodes, right? Using k-nearest neighbor or different types of techniques or functions, cosine, Euclidean, Jacquard, and all of those things that allows you to compare and provide a score of how similar each of your nodes are. And what I love the most is the graph embeddings, right? Using techniques such as node to vect, fast RP, or graph sage allows you to convert your graph, your knowledge graph, into a vector representation that your traditional machine learning platform understands, right? Like the likes of Data Robot, H2O, Data Eco, Azure Machine Learning, SageMaker, or Vertex AI, right? You'll be able to integrate your knowledge graph using graph embeddings technique in GDS to tie it nicely with your existing machine learning pipelines. And then to top all of those, you have machine learning pipelines, right? That allows you to discover the best model, right? All you need to do is just provide your historical data within the graph data science library with some labels after you do some labeling of that. And then you'll be able to answer three key questions. One is if you wanted to find what label should this node have, right? Based on the historical data, or even what's the value for this missing property, right? So this is like a new feature that we have. Or even is there a relationship that must be formed between these two nodes, right? You'll be able to persist, publish, as well as orchestrate your data using GDS via machine learning pipelines. And remember, right, GDS cannot stand on its own, right? It's able to integrate within your ecosystem. You can use GDS as standalone to generate insights, but at the same time, you can integrate it within your existing data, analytics, and machine learning ecosystem. We can cater for multiple programming languages such as Java, Python, JavaScript, .NET, or Go, and also use a suite of data connectors, Apache Spark connector to be able to integrate with your big data platform, it being Apache Spark or Databricks, or use Data Warehouse connector to connect with any of the existing databases, relational databases, Snowflake, BigQuery, Redshift, Azure Synapse Analytics, or be able to ingest data and stream data within Neo4j using Kafka, and even connect your data to visualize it into tabular dashboards, right? The likes of Power BI, Tableau, Looker, TIBCO, Click, MicroStrategy, maybe in the form of ODBC or JDBC, and be able to have integration with Apache Arrow for faster data loading. So now that we've discussed what is graph data science and how is it doing with graph data science within Neo4j, who is doing graph data science, right? So these are just some of the leading customer use cases for graph data science. You can use graph data science for fraud detection, right? Do the first party fraud or predict fraud with node classification. You can even do graph data science for recommendations, right? Do an item recommendations with some node similarity, for example, or even do some market segmentation with community detection and even prediction of the next purchase of your customers. Apart from fraud and recommendations, you can also use customer 360, right, for entity resolution, right, using the third-party cookies, or identify the roles with centrality algorithm, like who's the most important amongst your customers, right? Who's the most influential, or within a logistics or supply chain, right? To optimize the routing, right? Identifying alternatives with similarity or dependency mapping, or even risk assessment. And these are just some of the example use cases that we do. And there's more. There's tons of use cases that you can use for graph data science. So let's just walk through few examples of those customers, right? For fraud, we worked with some of the top customers across the globe to be able to correctly identify account holders. So this is for Danish Business Authority, right? So they use Neo4j to identify account holders committing fraud. And as a result, there's a 300% increase in fraud detection. That's 3 times what they currently detect, right? And 10% true positive escalation, as well as a reduced false positives, which then have a 150% increase in payment flows. So this allows them to make much more efficient fraud detection solution in their enterprise environment. And of course, one of our first Neo4j Graph Data Science customer, we have Meredith, right? They use to identify anonymous users using billions of their data they ingested within Neo4j of first party and third party cookies. And they're able to identify 163 million unique user profiles. That leads to 500% increase in visits per profile, as well as, more than 1,000% increase in touch point length and 20-30% improvement in understanding. And that's just using one algorithm, right? Using the weakly connected component algorithm that allows them to analyze those data, billions of data at scale. And of course, we also have AstraZeneca for recommendations, right? So they use graph embeddings to find patients so that they find patients who will benefit on this drug using some patient records, right? And they'll be able to help educate those providers. So they use 3 years of health records with more than 4 billion data points, right? And they're able to create unique archetypes of personas that's mapped into graph embeddings, and they use it to use in their existing machine learning pipeline. And of course, for logistics and supply chain, we have Orbit MI. Orbit MI use Neo4j to plan maritime routes based on distances, cost, and internal logic. And as a result, they're able to find or plan their routes in a sub-second, right? And that reduces the global carbon emissions by 60,000 tons with 12 to 16 million ROI. And the secret sauce of that is the A-star shortest path to be able to find the best shipping route, port, duration, and distance, considering all of those factors. Right? So what you've seen right now is a manifestation of how Neo4j create business impact, not just with the customer, but also with the environment, right? Being able to reduce global carbon emission by a lot. And so, why Neo4j for graph data science, right? There are three key things of why Neo4j is be used for graph data science. One, it's essential, right? Graphs are the foundations of modern data science, according to industry analysts, right? That's been proven several times with all the customer use cases that we have to provide better prediction than traditional techniques. Because remember, relationship is treated as a first class citizen. Two, we just don't fulfill something that's essential. We also make it easy. We provide a unified data science platform that integrates with your data warehouses, AutoML, or machine learning platforms, and more, right? We can integrate with your existing enterprise environment. And speaking of enterprise, we are enterprise. We're the only platform that provides or offers support, scalability, granular security, right? The most advanced granular security for a graph that can do machine learning ops, ML ops, in a hybrid deployment of your choice, maybe in the cloud, on premise, across different cloud providers. And these are the reasons why Neo4j for graph data science. So that's all for my presentation. Thank you so much. I hope you've learned something. And if you want to know more, get in touch with us at apac@neo4j.com. Thank you.
Okay. Thank you, Neo4j, for that great presentation. As Emil said, if you have any questions or if that or his presentation captures your interest, you may give them a visit, Neo4j's booth over at the booth section. Emil's colleagues will be more than happy to assist anyone. All right. So up next, we have a panel discussion on Asia's FinTech on 2030. So in this panel, we have Arivuvel Ramu, CEO of Inipay, Alison Jap, Chief of International Partnerships at Doku, Manu Rajan, Division CEO at Wing, and our moderator, Shikha Jory, Banking and Digital Transformation Expert at Kearney. Okay, hand it over to you, Shikha. All our speakers may now open all their cameras for the audience to see. Thank you. Shikha, you're on mute. Calling Shikha. Ramu, are you able to open your webcams for the audience to see? All right. Hand it over to you, Shikha.
Hi, Jed. I hope everyone can hear me. Ramu, Manu, and Allison, are you able to hear me?
Yes, we can.
Okay, wonderful. So, the topic that we're going to discuss today is something that I've been looking forward to. I think we lost Ramu. But while he joins back, let me introduce the topic and maybe we can get the introductions going, and Ramu can probably go towards the end. So this is the topic I've been looking forward to discussing the most for a few months now, since I found out about this particular session. And the topic is very forward looking and very looking towards the crystal ball. So I'm not so sure if all of us will have all the right answers, but we're certainly looking forward to a very enriching and meaningful debate. The topic is about fintech in 2030, looking forward at least about 5 or 6 years in time from now, and seeing what are the big shifts we would see in the landscape. How do we think it will evolve? What would be the key challenges, etc.? And we're very looking forward to discussing that. I'm Shikha. I'm a partner with Kani, based out of Singapore. I lead our financial services practice for Southeast Asia. Personally, have now not only looked at collaboration between impact incumbents and fintechs and launch of fintechs by incumbent financial institutions, but also have recently started serving fintechs as consulting clients, as they look to expand and become regional players, or as they look to big tech players look to expand further in financial services. So it's been a very exciting space for me in consulting, and seen all kinds of collaborative expansion initiatives being taken. I'll hand it over to Ramu. Are you with us now? Can you hear us?
Yes, Shika, can you?
We can hear you. Maybe you want to go next. Introduce yourself, please.
Yeah, sure, Shika. Thank you. Um, Good morning. Good morning, all. I'm Ramu, founder and CEO of Vinay Financial. It's a Singapore-based fintech company, and we are in the process of launching a new bank. And before to this, I was a group CTO and founding team member of first privately owned retail bank called Tonic Digital Bank in Philippines. So, coming back as part of Vinay Financial, we are launching Future Bank, which is Banking 4.0. What it means is hyper personalized financial experience to unserved or underserved retail and SME consumers. It's about 200 billion US dollar market opportunity in Southeast Asian market. What mean to the audience? We are building cloud native AI and data driven next generation financial experience, a platform which allow us to launch Q2 2022 in IPay and in Singapore as a B2C company, and in Inai Bank as Philippines Q1 2024 with full modern neo banking, unique experience to inclusive open finance and dealing with ecosystem partners. That's where the topic is going to be very attractive in terms of who's the next disruptor. And the dream is to launch five new banks in 5 years across Singapore, Philippines, Indonesia, Vietnam, and India. So what it mean to customers? A customer can access to innovative digital product via modern personalized experience through traditional digital touch points and like mobile first and advanced touch point like interactive where like voice and chat and wearable. This is what the future we are going to talk about more in detail. Thanks, Shika.
Thank you, Ramu. Alison, do you want to go next?
Sure. Thanks, Shika. Can you hear me all right? Okay, great. Well, thanks for having me. My name is Allison. I am the Chief International Partnerships Officer for Doku. Doku is based in Jakarta, and we've been around for 15 years. We are a online payments player. We have different kinds of solutions, but we aim to support the digital economy here domestically by providing services like payment gateway, local disbursements, cross-border remittance, white label wallets, and also biller products. I think, I've been in Doku for 9 years. I think in the 9 years that I've been here in Indonesia, certainly, things have changed and in unimaginable ways, right? When Doku first started in 2007, I think Indonesia was still really at its infancy when it comes to the digital economy growth. There weren't any unicorns here in Indonesia back then. I think also the startup scene was really, really, almost non-existent yet. So I think the players that were sort of ready to embrace the digital economy were a lot of non-tech companies, right? But they were large enterprises who knew that they needed to improve their business process and automate a lot of their money movement. So our first clients were actually insurance companies and airlines, right? So fast forward to 15 years on, it's certainly has changed so much, right? So many people now need that online payment support. Everybody's looking to digitize, and also quicken how they process their money movements. So a lot of disruption going on, a lot of innovation still happening in Indonesia right now. Very very exciting times, definitely. Thank you.
And last
Go
but
ahead,
certainly
Shika.
not the least,
Yeah.
Rajan, if you could introduce
Sure,
yourself.
sure. Thank you, Shika. First of all, my name is Manu Rajan. I'm the division CEO of Wing. Thank you so much for having me and Wing here, along with this esteemed panel. Uh, Wing started out as a mobile financial services company in Cambodia 14 to 15 years ago. 2008, 2009 is when we started. And when we started, we approached the unbanked just like how a bank would do in a very traditional, conventional approach. And it didn't work. So we are one of the first failed fintechs in the world. And then we failed so miserably that the company had to be sold out for about $1. So the current promoter of the company, the Royal Group of Companies, they bought it over for $1 in 2012. It was an insolvent company and turned it around just by thinking differently about the approach to reach the unbanked. They said we are a mobile financial services company, so we should be making use of mobile numbers to reach the unbanked population. So we brought in the assisted or aided digital financial services model of using agents to do digital transactions for the unbanked, and it just took off. And since then, we have led many innovations in the market. He's market leader today with doing about more than 120% of the country's GDP as transaction volume every year. Wing has been an enabler in the market. We have worked with a lot of private and public sector players in this market. Has always kept the vision of driving financial, digital, and gender inclusion in the market at its forefront. And today it has expanded to have interest in commercial banking, fintech, and also e-commerce. And that's why we call it a Wing division. So there are three different companies under the Wing brand, and I lead all three of them. Thank you.
Fantastic. I think so many different experiences and journeys. I think it's going to be a very interesting dialogue. So let's kick it off. Um, First question, I think, worth thinking through, given the forward-looking crystal ball nature of the topic. What do we think about the future of fintech? Which markets do we see, fintech becoming now, as a booming fintech landscape, more and more startups emerging? Which areas? I mean, there's always disruption and new business models coming up, but what are some of the fundamental shifts we are seeing in the nature of that disruption as well, and the pace of that disruption? I think would welcome any inputs from or your observations of what you're already seeing or you expect to see in the next few years to come. Maybe Rajan, if you want to
Sure.
share, or Ramu, you want to share your inputs, either way, yeah, on this one.
Sure. Ramu, you want to start or you want me to start?
Rajan, go ahead. I'll
Yeah.
follow you.
Yeah. We still believe, at least in the context of the Cambodian economy and the Cambodian market, we still believe there are still barriers to easy access to finance. We are still predominantly unbanked in the country. The national bank figures say about half the population could still be unbanked. We provide mobile financial services, which still brings easy access to finance to them, but not the whole spectrum of financial services products that somebody could use. If I were to pick one particular segment of the market and then elaborate on that, it could be the micro SMEs, the SMEs and micro SMEs in Cambodia. Out of half a million SMEs we have in Cambodia, about 98% of them are micro SMEs, and 95% of them are still unbanked, which essentially means that they still don't have the necessary documentation that a commercial bank would require to provide them access to finance. So that's where fintechs like Wing come in, or commercial banks like Wing Bank with a fintech mindset come in, where we not only have banks, we are thinking about creating platforms where you have access to finance, access to market, and also access to technology, which some of them may not even have some of them even have realized the need for. So in our minds, the next revolution of fintech is going to happen in income generation using these seamless ecosystems that you're going to build for consumers as well as for the economy, the SMEs, who are going to be predominantly the drivers of economy in all countries across the world. Thank you.
Yeah. Thank you, Manoj. Little bit I would like to add on it. See, I'm looking at the Southeast Asia as a whole. Just glimpse view the problem today, starting with if you say Southeast Asia, a booming economy into Philippines, Indonesia, Vietnam, Cambodia, and Laos, of course, Malaysia and Singapore, bit of it. So, looking at Southeast Asian economies growing by 2030, Southeast Asia is holding more than 40% of the world financial growth. That's one side of prediction. But the problem with Southeast Asia today, if you look at Philippines, for example, 17,000 plus islands and 130 million consumer base. And out of that, you love 2,700 plus banks. And still less than 40% populations are banked. Go back to Indonesia, 240 million consumers. I mean, population. Out of that, still more than 60% underbanked and more than 7,400 islands. So we are talking about similar Vietnam, more than 90 million population, 60% unbanked. So they're looking at one side of story is these are huge retail population is unbanked or underbanked. Probably today the traditional or digital flavored bank, including few of the digital banks who's running today, the behind account switchers are sweet spot where if you know the pyramid, the people want to be in the money making area where I can quickly make money instead of solving the actual people problem. In another side, the micro SMEs, Manoranjan rightly said, the backbone of today in Cambodia, Vietnam, or Indonesia, more than 70% of GDP come from SMEs and micro SMEs, not really large and enterprises in terms of GDP growth. And are they really getting the sufficient support, either a working capital or invoice financing or for their livelihood? So the disruption today, where I'm looking at it in four ways: retail customers, micro, small and medium businesses, and third, that's where the ecosystem partner comes in, where like Manu and me, fintech players who want to work with the institutions, and the fourth one is regulator. If you allow me to little deeper, for people today, most of the retail customer experienced with social media and e-commerce and telco growth, it trigger the next generation financial experience need. The way you consume today, social media or e-commerce or telco, is that today in a financial industry? Answer is no. That is where the need of future fintech's landscape growth. For example, people don't need a digital bank or traditional bank or modern transformative services. All they are looking at, can I have personalized contextual financial user experience? What it mean? Help me to save money. Don't throw me your account. Which means, can I have a simple personalized communal saving product? Help me to earn little more money, which I have hard earned money with me. Can you throw me a couple of wealth management product? We can multiply my money. Probably need quick access to cash. Most of this underserved market need of quick money in terms of working capital, livelihood. We are not talking about poor. We are talking about irregular income pattern people. Can I get emergency or medical or food or retail or educational credit or even yearly wages? So this all need to come with the digital trust to reach out the different connectivity problem which I talked about from various islands where people are there, where the banks don't want to go because of higher CAC. They don't want to serve small ticket people and they don't care. And the people need secure my life. They don't want to buy $1,000 insurance rather than, can I pay $1 per week? Can you help me to how you can save my life? This all linked to hyper personalized experience. One of my friends talked about the payment transformation happening, which is a simple use case. Allow me to send money to overseas loved one in a easy real time money movement, either domestic or international. um, the best use case I can just want to say and complete it. So Maria, who's 32 years old, living in is a Filipino living in Singapore, $450 salaried person, want to send emergency $200 cash to Metro Manila. Do we have option today? Can I access to that fund without going to money lender paying 10% per week? And seamless. Do we have a seamless today from sending Singapore to directly to Gcash, less than 10 minutes? If there is a simple use case today not solved, this is where fintech like me or Manu or Alison need to be there to trigger the next generation financial experience for people to, you know, revolutionize the way money works. Thank you, Shika.
Thanks, Ramu. I think that's interesting. I think there is clearly a space for growth in consumer and SME segments, and especially in developing markets, given the, as you and Rajan pointed out, the under-penetrated levels of financial services, whether it be it insurance, be it banking, be it even payments penetration. And I agree with you that that those are the segments where a lot of the fintechs are focusing. But I would also add on that I do believe that there is the mid-market segment is also quite interesting, where even though it is served by traditional banks, there is still a funding gap there, and that funding gap will increase as the funding squeeze comes in the next 2 to 3 years forward looking. So I think there's a role for fintechs to play in that space as well, the space that sits between SME and mid or large cap corporates. So I think definitely a lot of areas for fintechs to play a role in bridging the funding gap in other financial services needs. A question I have for all of you is, when you think about the focus in terms of geographical problem to solve, which has also come out in the discussion here now. Um, Sorry. Hello, Ramu and Allison, can you still hear me?
Yes, of course.
Okay, okay, good, good. Uh, Sorry, a pop-up was coming that they had a connection problem. But as we tackle the real problem of expansion in the
So while we are waiting for Shikha, Ramu, so that's quite an interesting startup you have at InPay. So you have launched in Singapore, or you're planning to launch in Singapore?
We're preparing. We are working on building the capability and working with regulators and licenses, targeting by April end or May first week. We'll see NIP in people hand with micro
Awesome.
lending and payment driven and remittance driven.
So you're busy. That's not far away. So
um, the next serial startup.
awesome. That's quite interesting, and the very ambitious plan as well. 4 countries in 4 years, right? You said 2 years.
Yeah, four countries in 4 years by achievable. This is where I know Cyril Shika is joining. I'm not only seeing the problem in retail segment, even SMEs today. Most of the micro SMEs, I'm seeing problem today. I met a lot of freelancers who can't able to open a small account. Today, I can work with 10 different guys in a couple of hours. I can get $100 to $2,000 range. 5 different employer can pay me. Still, I can able to get that money into one account. Opening up a banking account for freelancers. I'm talking about individual who has a company and want to make money. Still, it's a big problematic opening a company. You need to go and produce a lot of things along with the documents, including business model.
Yeah,
It's
absolutely.
a hell opening up account where all they need is simple wallet with the card, and over the period, if you can able to look at their transactions and see whether you want to give a working capital or invoice financing on top of it. It's just individual. Today the trend is more freelancers are working. If you want to
Mm,
elaborate that use case into 1 to 5 employees, small as anybody between $0 to $20,000 cash flow guys. It's like small shops, retail shops. Um, Today typically 80% of these micro SMEs go to money lender. And a very popular use case I'm studying, part of my case studies and research, the lending in the market, 60% lending and given to 80%. There's a
mm,
secondary market which giving you underwriting you with 60% interest rate, and you need to repay by 80% when the market is, you can really help them to lend less than 24%. And this is the kind of market problem if someone want to really disrupt in the micro SME side and help them on invoice financing or working capital.
mm, mm,
Another side, I'm still seeing regulators are learning, either in Cambodia or Laos or still Indonesia. One side, everybody wants innovation. Another side, allowing the real people to innovate in terms of data residence issue. You have it, so you cannot use the cloud native product to lower the CAC, lower the infrastructure cost. You have another side of licensing. That is why Alison politely said, too many payment companies in Indonesia. You don't need too many, but we have too many because that is the only way to innovate, using the current opportunities in the market. Even I would see research, more than top 10 payment companies in Indonesia now, and most of these guys are anything between 400 million US dollar to the lowest 150 million US dollar funded for payment companies, and all they are doing is BNPL and transactional nature and wallets. And some of them are cross-border remittance. Few they are getting into SMEs now. Very interestingly, I'm seeing regulator need to be collaborate with the fintech. That is where the organization need to work closely with a regulator. How we can break this Chinese walls, and helping each other to really innovate. I'm seeing a
mm.
huge
Alison,
opportunity, but
yeah, sorry. That's what I was just thinking. So, Alison, you must be working with a lot of incumbents, right? In in your country as well as in the region. Um, so, how do these see? I worked across the world, and I've noticed that in many parts of the world, except in Cambodia, that I've noticed the incumbents are always looking at fintechs as competition. And in Cambodia, it was just the opposite. We have over 100 financial institutions we work with us. What has your experience been? I mean, do you find this kind of mental block towards fintechs still even now? Maybe 5, 10 years ago it was different, but do you see that even now?
To be honest, I think in Indonesia, between the traditional institutions and the fintechs, I think a lot of collaboration is actually happening, right? Because I think, I mean, there's over 100 banks in Indonesia actually, but obviously only a handful of really big ones, right, that have very strong nationwide coverage. So I think for a lot of the big banks as well, they know that they want to, obviously get into more into the digital economy, right? But because of the regulations and a lot of the compliance things that they face, I think they understand that they need to move in a more agile way. So I think a lot of them are very, very open to working with fintech. Of course, not in, not necessarily in everything. But for Doku, for example, I mean, we, one of our core business is payment gateway, right? So without without traditional players, we won't have a payment gateway business, right? So certainly in that sector, the banks are very, very open, and in fact, they share clients with us, and they really see us as a facilitator and an enabler, right, for a lot of their transactional banking businesses. So I think also, maybe not so much in lending, but definitely in other areas like, a lot of fintechs are now in Indonesia focusing on digital identity, right, for eKYC and digital signature. I know a lot of the traditional institutions are working with many of those companies to scale up their, user onboarding and user registration. So yeah, I think in Indonesia it's very collaborative so far that I've seen. Yeah.
Shika is back, so welcome back,
Yeah,
Shika.
Shika is back.
Thank you,
Manu was
Alison.
taking over
Apologies.
as a
I had
moderator.
to I had to switch my Wi-Fi network to a more stable one, but hopefully this should be better now. So sorry about that. I am assuming we were talking about the collaboration between fintech and incumbents. Great.
Yeah, yeah, sorry, Ramu was talking about the opportunities for every fintech, how there is enough room for innovation for many players to coexist. So that's what, when I was curious to know if how's Allison finding it? Are incumbents finding fintechs as threats, or they are more collaborative now? Sorry, yeah, please go ahead.
Yeah, it's actually pretty interesting because I'd advise a lot of the incumbents, and I can see not a single strategy recently that I've done in which there hasn't been a consideration given to distribution through fintech players, right? And that's now an active part of distribution strategy for most incumbents. And there is a very clear target placed on that and how they want to collaborate along the value chain. So I think it's about how incumbents can grow their balance sheets, but not play along the full value chain on whichever financial services business model they are in, be it insurance, be it lending. Can I just be a balance sheet provider and the distributor is a P2P player? Or can I just be a balance sheet loan portfolio provider and relieve myself of the capital crunch I may be feeling by working with a fintech to securitize the loan and then distribute it to investors? So I'm seeing a lot of these kind of innovative models come in of collaborations between even in models such as co-lending where banks are co-lending with fintechs. I'm seeing that as well happen. So I think it is a very exciting space and hope to see more of that in the future. Sorry, when I got cut off, I was going to ask a question which has been on my mind around geographical expansion, which is around that I see fintechs, at least in the markets that I'm active in, largely focused on tier one cities with some plans to expand beyond tier one. And I feel that expansion or the next wave of digital boom will come from those tier two, tier three cities and beyond. And that's the part where getting that right with the challenges that we face around the sophistication of the consumers as you go beyond, right? And the digital adoption in the market as well, which is also a key criteria for fintechs to grow. Apart from regulatory, is that something that actively you see fintechs thinking about now? How do they grow beyond tier one cities and leverage the next wave of digital boom?
Yep, probably. I would like to just add, Sharika. See, today, if you look at it, fintech, the first stage of fintech, most of us, what we did challenge is the gap what institutional bank and the regulator missed that regulator gap. We tried in the, as you rightly said, tier one cities, because tier one city is easy to test the digital product with a lower CAC, because the customer reachability is easy and the technology experience can be tested quickly with the connectivity, and you can easily deploy the fund or the tested the use cases easily. But getting into tier two, tier three, or even if you say from urban to rural, or rural to island wide, if you want to get into it, that's different customer segment, different user experience, different device touch point experience. Not
Mm.
always self onboarded, right? There is assisted onboarding,
Yes.
assisted servicing, because we are talking about a micro SME sitting in a rural village. Do you think they have an advanced tablet they might have and using iPad? No, they might have it in a even if there is a feature, it $100 tablet you can give it to them, or you expect a feature phone can be used to some medium of connection and initiating different type of services through that, or even some of the offline. Sometime I don't have electricity. I have electricity only 4 hours, and I can use my SIM card within the 4 hours to connect it. I can capture a lot of things in offline. Then boom, one particular, because most of the guys in prepaid guys, if you're looking at rural side of it, not even they don't hear about even postpaid connections. The limited internet can able to capture all the offline connectivity and push it back in one chunk of transaction. There are a lot of things you need to really look beyond the current digital experience what we are building if you want to really reach out to those part of people. And moreover, the handhold, the assisted or agent, the traditional agent banking system, little complex in the local area. If you are starting from splitting business model, you go with the hierarchical structure, and that hierarchy starting for the different business model altogether for fintech as well. You cannot give a direct P2P credit line. You need to have a hierarchical credit line which is supported with different based. Even if you want to sell voice and data, or you want to sell bill, different type of bill payment for people, you cannot do a pay per use model. You need to have a different model of underwriting,
Yeah.
handhold, hierarchy. See, that's innovation in model, innovation in assisted servicing, innovation in the even the digital touch point, which we say that need to be fluent in a simpler way. I cannot think about wearables and voice recognition in a village, where probably I need to think something simple, intuitive, and easy to access in a lower bandwidth devices.
Mm.
That might be one point of thinking, where you need to think about user experience for them in the modern money. Probably, if you want that, being in Cambodia.
Yeah, sure. We have see, I have a different perspective to that because it goes back to the purpose of the fintech. Now, the fintech's purpose is to drive financial inclusion. Then you have to be in the rural areas, which has been our purpose. So we started with the purpose of driving financial and gender digital inclusion in Cambodia. So we are there in every district, almost every commune, and in literally every street if you come to Cambodia. So almost 100% of the population and more than 100% of the adult population bank with us at least once every year. So that's a scale at which we operate, and at that scale, presence is very important. And not everybody is digitally comfortable to do a
Yeah.
transaction on their own. While every product service solution is built digitally into an app and also into the POS machines of the agents, customers, we also find certain segments of the society do not find it comfortable, or they don't have the confidence to do a financial transaction on a mobile app on their own. That's demographic also. We look at the slightly elderly population of customers that we have. We find that they're very uncomfortable doing the transaction on their own. So they go to an agent and then it's still a digital transaction. So over the counter, you're cashing or you're handing over the cash, and the agent is doing the digital transaction on your behalf. But for the customer, it is a human being at the other end of the table who they can hold responsible for in case they make a mistake and lose the hard-earned money in the process. But the younger population is very comfortable doing the digital transaction themselves. So we have built in all solutions, all services into the app as well as onto the POS machine of the agent and enabled it. So if, for example, the factory workers that we have, very, very peculiar behavioral trait. The factory workers in Cambodia, there are about a million of them, and we do payroll for more than 30% of them. So 30% of them get their salaries every 2 weeks paid into a Wing bank account,
Mm.
and immediately they go to an agent and cash out the money and then hand over the money over the counter then and there itself, and ask the agent to send it back to their parents in their native villages. And it costs them money if they're going to do it, because the agent is another SME model, so you have to pay commission to the agents. Obviously there is cost involved in that. But if you are doing it using an app, it is free, but they don't have the confidence to do it.
Mm.
And they also fall prey to the loan sharks. They can actually take a loan for less than 10 seconds on their app. So you just have to click, 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 and in 3 screens your loan is disbursed into your Wing bank account. They don't feel very comfortable doing that. They still go to the agent and tell the agent, can you check how much is the loan eligibility I have, and then cash the loan out, so on and so forth. Uh, so there are three important traits here. One is the confidence, which is demographic. and also goes back to the educational level of the person. A factory worker is usually high school, hasn't even done high school, as it's a school. They're predominantly school dropouts. So that goes back to say that the financial inclusion is on one side, and the digital financial inclusion is on the other side. So if you have to drive digital literacy and adoption of digital banking, you have to start quite early, because the unbanked population in every developing country is usually not very well educated. So
Yeah.
you have to start from the primary school and not after they are adults, because they're already out of the school. So what we do in Cambodia is we work with the National Bank of Cambodia and the Ministry of Education and train the teacher trainees, where the teacher trainees then go back to the schools and then teach the children at a very early stage in their life about financial inclusion and financial literacy. So that's something that we do. So coming back to the question of can a fintech be concentrated in urban area? It depends upon the purpose. If your purpose was just to remove the friction from your normal banking processes, then it's okay. So you're talking to the banked population. But in our case, we predominantly address the unbanked, and for us, presence is important.
Wow, Rajan, I'm so glad I asked this question. The story you've shared of what Win is doing in Cambodia is very inspiring.
Thank you.
And I hope that is the story that we see for some of the fintechs as they expand and scale in other developing markets across Asia. Uh, Another question I had was, so there's a very bright picture emerging, right? The developing countries undersaturated, all the way from consumer to the mid market space. There is expectation of white spaces there, right? Be it for fintechs alone or in partnership with incumbents, we can see that that will be the case. And a lot of growth drivers already coming. Digital economy boom we talked about. Next wave of digital adoption we talked about. Expansion to beyond tier one cities we talked about. But at the same time, we see headwinds coming towards fintech, right? In the current macroeconomic environment, which is the what's happened with cryptocurrency and related fintechs, what's happening in terms of credit quality deterioration and focus of the regulators around BNPL players, and the credit concentration building there. There are a lot of these kind of moves we see in the market, a valuation adjustment for big tech players, where some of the bets they placed haven't played out the way they expected it to. So, looking at all of those changes, how do you see the fintech landscape evolving in the future? Consolidation, maybe there will be a fundamental shift in the nature and the type of fintechs. Do we see consolidation? Do we see a lot of exits? Do we see portfolio rebalancing, bets rebalancing? I would like to hear from all of you.
Uh, do you want me to start? Okay. Um, Definitely, there is going to be questions asked about the sustainability of the business models. Now, free is no longer a sustainable model, and it was never a sustainable model. But at least in terms, some of the investors found that that is a sustainable model. Maybe they were hoping that they will be able to monetize at a later stage. But now, if you see the investments that are happening in fintechs in 2022, you will see this big drop that is happening in valuations, alarming, startling drops that's happening across the biggies, well-established businesses across the world, right? And the investments has also dropped 30% in Q2 versus Q1. So there are big question marks being raised about sustainability of business models. Now, so it all goes back to that, saying in the long run, is the fintech going to add a particular value to this customer, and is it working? Is it doing justice to the unit metrics? Now, if you're just scaling up your losses, then the question mark is getting bigger and bigger. But if you have a sustainable, viable business model that's addressing a very relevant problem or a pain point that is existing in the market today, which consumers want to be addressed, then there definitely is value. There is definitely in value your business model, and the business also is going to be valued.
Okay, that's interesting. So, Rajan, you're saying what we're going through is almost a litmus test of the sustainability of the new business models we've seen proliferate in the last few years with a very favorable funding, right? And
Absolutely. If the business is not sustainable, then definitely there is no question of longevity. So it's going to, you will see consolidation happening.
wonderful. Alison and Ramu, any thoughts from your end around these headwinds we are seeing?
Yeah, Shika, probably I'll just add it a minute. See, in 2011 to 2015, when we say digitalization is means just bring the most traditional channel into digital channel. That's where most of the people just digitalization, and that was very attractive. And 2015 onwards, for fintechs, we taken a new use cases coming to the market. It's got a lot of attractive, and most of the time for investors, attractive here is number of customers. Nobody talked about unit profitability. Nobody talked about sustainability. If I throw them in, hey, I'm launching Q1 2020, and in 6 months I have a 500,000 customer base, and yeah, I have 1 year 1 million downloads. Yeah, immediately I will get ABC's Capital will reach out to me for $100 million betting.
Yeah,
And look at even today, digital banks today fails. Most of you are not touching the sensitive part. Most of the guys are trying to do a quick win. The quick win is more downloads. Number one, number two, throwing high interest rate deposit product,
yeah,
and which means that every customers out there want to attract, want to make money. They throw money, and you are going to pay them high interest, which is the investor money, and you don't know how to make money. The make money through most of the case are lending, because Southeast Asian market is not a great in cards
yeah,
business. So you have a two-way you can make money. One is pure lending, or probably cross-border remittance through transactional,
yeah,
you know, fee. But unfortunately, most of the digital bank where I hear, where I see is all saving banks. Either you want to go ING, CIMB, or even some of the bank I don't want to name it, which are going to die soon. And these all these guys are anything between 200 million US dollar to close to $1 billion deposits, and lending is Manu knows it since a hardcore banker, and not even 20% of booking value. And if this is not sustainable, that is why Manu keeps saying the business model is not sustainable, because they are not built on the balance sheet, not built on the profitability model.
yeah,
If I am launching any product which is not profitable, I'm going to die soon, or I'm going to empty my investor pocket. But the investor will learn over the period. That is what happening now. Next 2 years, we are all going to see the heat. And every fintech, if they're going to survive without valuation impact, fantastic. Welcome 2025.
so next 2 years are critical. I fully agree with you. Couldn't agree more, Ramu. And I don't think we need to take names. We all know all the names out there. But yes, some of the recent exits and expected exits are driven by that. That digital banks go into it looking at building monthly active user base, clicks and downloads, and they do that through payment and deposit products, which are um, zero charges, very high interest rates, incentivization, and they fail to cross sell to lending, right? And
Absolutely.
that's why it's not sustainable. And so that's why I really like the way this discussion started, which was looking at the real problem statement that you're looking to solve, which is not just launching a digital bank because licenses are coming out, but am I doing something which is a business model that addresses a particular business problem, right? And is then after that seeing, is this model scalable beyond certain geographies that you're focused on, beyond certain customer segments that you might be in a niche manner focusing on. So I agree. And 2 years, next 2 years are going to be very interesting. Alison, anything from your end in Indonesia that you are
Yes,
seeing?
of course. I was smiling a lot when Ramu was talking because, I think a lot of things that you said obviously has happened in Indonesia as well, right? I think what's pretty unique about Indonesia is that it's a pretty big populated country, right? It's the biggest in Southeast Asia with 260 million people, and there's a big urban and rural gap, right? So for fintechs here who really want to grow big and really reach those super high valuations, I mean, you have to obviously get the growth, right? But what happens when, out of 250 million, the ones that the users that are really ready to give you that growth are really concentrated only in certain areas, right? Which are the urban areas. And then you have multiple players sort of vying for the same set of users. And then that's where all the promos and the incentives and everything comes in.
Yeah.
So, but then what happens to, there are still many, many pockets of underserved, right? Even within the same country. So who are solving for those? Because to solve for that part of the market, it takes a much longer time, right? You really have to lay down the foundation for education, for financial literacy training and everything. And you really do need to have people on the ground, to be with the users and to really teach them how to use it and, make everything very real, right? That's very expensive and that takes a long time, a much longer time. So yeah, really interesting a lot of things that you said because I definitely see a lot of the same trends in Indonesia as well. So of course, hoping with the funding squeeze that people can sort of grow, but take their time in growing, right? Really look at the problems and really looking
Yes.
at who are they solving for, instead of just how many downloads or how many new registered users every month, right? So yeah, hopefully the funding squeeze will sort of have everyone um, kind of have a bit of a change of pace, right? And look at a more longer term sustainability in terms of user base, really bringing out real change, sustainable change. Yeah.
That's fair, Alison. I fully agree that in the next 2 3 years we will see, and we're already seeing it among the big players, rethinking of the portfolio, the bets that are placed, the pace at which they're scaling up those bets will be more considered, and maybe there will be some business models that will, a lot of business models that may just die out because they're not sustainable or haven't been able to prove that they are able to become sustainable. So I think all this will do is speed up the pace of that, all of that, that changes and shifts. It's very interesting. Let me ask one more question. Do you think that as a kind of, it already is coming through in the comments from everyone, so I might as well just ask the provocative question out there. Do you think that incumbent banks or financial institutions can launch successful fintechs as ventures? And if not, why not? If yes, what have been the success factors?
Well, maybe I can quickly add some comments there. The answer is definitely yes. They have been slow in the past, but they are quite fast now. So one of the leading fintechs in Cambodia is an incumbent bank. The threat to fintechs there is that if your business model was based on removing the frictions of the traditional banking processes, then when an incumbent bank becomes more agile and removes those frictions themselves, then what's your business model is the question, right? So then how are you going to monetize the transactions that you had? Cambodia is a very good case study for the rest of the world because payment as a business is non-existent in Cambodia today because payment is free. If you We have an interoperable QR platform which the National Bank of Cambodia has introduced called Bakong. So using that backend platform, every bank's customer can scan every other bank's QR code. And it is for free. And the merchants do not pay any money. So traditionally, if you're bringing a network credit debit card to transact at a merchant, then the network operator or the network owner charges the merchant a certain commission. But here it is completely free for the merchant as well as for the customer. So the monetizing of transactions business model is no longer existing in Cambodia. So so if you are a fintech that was just facilitated, like just going back to the previous discussion of fintech business models where you are just dependent on downloads and the number of transactions that people were doing, is no longer a viable sustainable business model in Cambodia. And I'm sure it is going to spread to ASEAN very soon because the Bank of Thailand is already doing a pilot with about six different countries on interoperability. And between Cambodia and Thailand, there's already a project going on for interoperability in
Yeah.
local currency between the countries. So very soon there is going to be six, seven countries in ASEAN which will have interoperability between themselves. So SMEs, individual customers can pay in their local currency across these countries. And I don't know if it is going to be charged or it's going to be free. Going by the Cambodia example, what if it is going to be free? So then what's your business model? Now, That's where the significance of incumbent banks becoming more agile and removing these old tedious processes to onboard, offboard, do transactions, or use services of their solutions and products come in. If they have removed those frictions, then they definitely are going to be in this business, because their business is monetizing money and not monetizing transactions. So it's an interesting twist that is happening in the market in Cambodia, and I'm sure it's just going to spill over to the region first, and then to the rest of the world.
Alison, Ramu, any thoughts on this one from your end?
Probably. I'll add it, Jason. See, it's a great, interesting question, right, Manu, on the incompetent versus fintech. One side, fintechs have started eating pies. Every fintech's having a bad uh, business model. But the thing is, we are seeing two problems. Number one, if you look at incompetent, they are doing transformations. They are doing transformation last 10 years. I know in the market, starting 2011, I'm selling financial services, building transformation products. But the thing is, the enemy is not technology. The enemy is not digital product. The enemy who sits in most of the incompetent, institutions are people. Their processes, which they don't want to change because they are comfortable life. Very frank, sorry to say this, but the thing is, most of the guys are working for their annual bonuses. There is no eager. For example, Ramu has resigned the job and started his own fintech. If Ramu would have very comfortable with working for a tonic bank, getting a more than a $500,000 salary, there is no eager to innovate anything, no try to solve problem, because the first problem start with the leadership on the innovation speed. Few leaders, yes, they are thinking differently, start building digitalization now. This is where the opportunity for fintechs. Number one, bringing new innovations, the innovation in business model, innovation in products, innovation in the real actual problem which is out there in localized market, which we automated with the technology enablement, go to the market. But there is a great collaboration. If incompetent thinks, oh, for serving that particular market is not my piece of cake, I don't want to go into my high cake, then all you can do is be a better collaborator with the fintech. It's a win-win situation. This is where people need to move into the next stage, how to be a better collaboration, and see the revenue sharing model, the profit sharing model between both the books can be shared. I think very few banks started working on that mode, and we need to expect more. Then that can be a coexist, both fintech and, because for example, a bank A can be a multi-billion-dollar balance sheet, which probably Manu and Ramu need a few $1 million of regular secondary booking, and to scale our businesses and fuel with the lower interest. And I can share, it's like 40 to 60% profit share if the model works. And there is a huge, if there is a 10 fintech working with that particular institution, the growth is going to be amazing. And on the reverse way, fintech, the bank also can learn. Then because fintech cannot be fintech for next 10 years, right? I will become enterprise. And the incompetent bank learning from me the processes and the agility and the innovative way of bringing product, they can learn and they can shape it up. That is how, I'm seeing the coexist and partnership need to think. That's from mind shift from the leaders in Southeast Asia. And if the business is not pushing that model, probably regulator need to push that model. Today, the other side big problem is, one side regulator try to save local institutions. Example, the best example I can see today, if you are buying a wallet license, I cannot use that wallet license for my lending. Then what I will do with the wallet license when you are doing cross-border remittance, domestic remittance is free. I cannot charge it. I cannot put that money into secondary market. I cannot put it into a different product. The money is locked, and eventually natural death. I can only play with the investor money. So, but these are a real chicken and egg problem. But the collaboration is the only best way to make win-win money between both the parties.
Yeah. And if I were to play devil's advocate, Ramu, a little bit, I think that across there are data points across markets, I won't say globally, where we can say that the established financial institutions do carry a lot amount of brand image and goodwill with the customers that a new fintech with a brand name in a very niche play may not be able to. So I think that
Agree.
collaboration model, learning from each other, is absolutely key, and coexisting is key. Alison, do you have some unique perspectives on that, on what incumbents could learn from fintechs or vice versa, on collaboration models or ability for incumbents to launch or scale fintechs?
Sure. Yeah, I think in Indonesia so far, like I mentioned before, I think it has been pretty collaborative. Of course, I mean, payments and fintech is such a wide topic. There's so many business models now. It might not, be applied the same way in every single sector. But I think generally speaking, banks have a very different risk appetite, right? And they also have a very different opportunity appetite. So I think that's one thing that we really have to remember, right? So, for example, in Indonesia, about 6 to 8 years ago, the central bank started giving out a lot of the e-money license, right?
Hmm.
So e-money in Indonesia is of a prepaid model, right? Basically, it's really targeted for financial inclusion. So the user downloads an app, they can top up using cash at convenience stores or through banks. So it's really for people who are hesitant to open up a bank account. So the e-money is what was really designed to be an option for that. So I mean, we didn't see banks sort of like competing. I mean, we didn't see banks acquiring these licenses, right? It wasn't like they wanted to get into that space and directly compete with the fintech players who were doing the wallets. But I think it really also spurred the banks to improve a lot of their existing services to their customers, right? Like starting to look at eKYC and digital onboarding, and looking at field agents that can go and meet the customers and assist them with the account opening and other services. So I think it was very win-win, right? Because you have the space for the fintech guys to play in the wallets, certain segments, urban, younger, the younger population. That was a very good audience for that because of the merchant acceptance network and so on. That was different from what the banks were offering. But then, it was also a win for the bank because you saw them innovate more. You saw them sort of like assess their services more and, upgrade those services, right? So yeah, I think in certain spaces, of course, it is more of a competitive nature. But I think in many, many other spaces, there's still a lot of space for collaboration. If not collaboration, then at least, sort of like uh, helping each other to improve each other's strengths and services to their respective bases. Yeah.
Wonderful. Thank you, Alison, for sharing that. Definitely a new perspective that, where not new perspective, but a different perspective than what we were discussing, which is there are areas in financial services where banks have now actively chosen not to play because there are now scaled up, very competitive fintech players in those areas. Wallets
Yeah.
are one of those areas, right?
Yeah.
Um, and there are areas where a collaborative model is the key to unlocking financial inclusion for all the
Yeah.
financial
For sure.
institutions, right? And then there are areas that are completely white space, which both banks and fintechs are targeting, and it's yet to be determined, what model will play out in those areas. I think micro is one of those segments, right? So it's quite exciting. What do you think, all of you here who have had a tremendous experience in scaling up fintechs yourself, what do you think is the critical factor, apart from sustainable business model, which we spoke about at length, right? A real problem, customer problem that is being solved. Apart from that, what are the other factors that you see are critical in scaling up a fintech and weathering the headwinds that are coming up, in the next few years? Rajan, if you want to kick it off,
Yep,
and
sure, I can start. Yeah,
all of you.
adaptable. In one word, if I were to say, I'll say adaptability, because you can't get just stuck up on your business model, because because you wanted to start a digital financial services company doesn't mean that customers want to be digital. So that's what we learned the hard way when we started as a mobile financial services company with 100% digital ecosystem. There was no customer adoption. So then we changed it to an aided digital financial services model, and it worked. But from the past 14 years of our experience, what we have learned is there are three important factors. One is definitely trust. And if you have the varied interest in fintech, where it's a transactional model, customers do not have to trust you so much as they have to trust you as a commercial bank. The payment is just a transaction; it is not sitting in the bank. So, when we did our own little market research to understand what change or what level of trust is required for a fintech and what level of trust is required for a commercial bank, it was surprising, and it was surprising to notice that they still trust the big brick and mortar structures. So we technically do not need a physical presence in this country because everything is digital. But we were forced to have our physical presence through agents. Now we have upgraded the agent model to master agents, which are some more comfortable ambience for people to come and do banking, more air conditioned, and so on and so forth. And also have huge commercial bank buildings that come up. But we still notice that the number of people who walk into the big, large commercial bank buildings is still less because functionally you just walk across the street and you find a wing agent and you do your transaction there. But those big buildings are more for perception and more to build trust in the minds of the people. We also have interest in e-commerce, which also gives us flexibility in terms of servicing customers. If this customer cannot come to an agent, the agent on wheels can go to the customer, because we also have logistics, we also have delivery, we also have an assisted e-commerce model called Wingmart, and so on. So the third most important factor that we found, the second most important factor was confidence, as I talked about it before, because people are not always very comfortable doing it themselves. So you need somebody to assist them. The third most important factor is ecosystem, use cases. Now, building the use cases is easy. That's not alone is not enough, is what we have learned. These use cases you have built, you have to also make it easy for the customer, or more comfortable for the customer to make use of. If you put it across as a digital, not everybody is going to be comfortable. So you also, at least in the short run, need to uh, have that adaptability built into your DNA to quickly correct yourself by saying, okay, if digital is not being accepted, let's have an assisted or aided digital model. So these were the big learnings for us: trust, customer confidence, and use cases, and the adaptability from an organization perspective.
Wonderful. Ramo, Allison, any of you would like to chip in?
Sure.
Sorry, yeah, Alison, go ahead.
Oh, thanks, Samu. Yeah, agree with everything that Manu said. Definitely. Just maybe want to add regulatory environment. I think is also a very key factor, which we didn't really talk too much about today. Indonesia, like in many countries, very tightly regulated on anything fintech and specifically payments, right? So I think having regulators that are forward thinking, right? And to understand that there's space for fintechs and traditional institutions to collaborate is really important. In Indonesia, certainly, I think we're very lucky that I think our regulators are very forward thinking, right? So I think that's one that is very important. And number two, I second Manu on use cases, right? To have that very good and deep understanding of use cases and creating a product that really fits those use cases. Because I think in payments, a lot of the projects that I've seen, a lot of the make it or break it points actually sometimes can come down to what we think as very small things, right? Very small features for the customer, or very small things that inspire more trust than doing it a different way, for example. So yeah, that's from me.
Thank you, Alyssa. I would add a little more flavor to it. See, the most of the fintech they started, they die in less than 3 years, or worst case, fourth year. You can see more than 5 years. If some fintech survive, which means there are few. few attributes required. That's what we closely see. Number one, starting with the people and the culture. Is it the team is same speed, same innovation driven, completely agile? The same, or they carry the cost efficiency? That's something we need to look at it, because day one you run like a sprint, then day two slow down, and day three you become another incompetent. That is not the story of fintech to be. We need to be day one how you are agile and innovative, same thing till on the growth stage as well. This is something the fintechs need to look at it. That is what I learned, and trying to build again. Number one. Number two, I believe in ecosystem partnership.
Mm.
How we can coexist, how we can build a business model to win-win, and how I can see if there is a bridge between Singapore and Cambodia, Singapore and Philippines, Philippines and Indonesia. And it's not just product, not about institution, it is about even countries. Today, this is where we need, Alison rightly said, regulator blessings and regulate. The innovation cannot play independently without regulator involvement and regulator blessings, and they need to allow us to grow. This is where I'm seeing last 5 6 years what markets, some markets going fast, some market is taking up, just because of the stage gates were still with regulator, since the financial industries are regulated entities, and you have a limited to play. Unless you want to play a valuation game, it's different. But if you want a profitable, you need regulator blessings, and that need a more partnership with them. The another one where I looked at it, customer trust. Fine, excellent. We talked about assisted model, self model, right? But end of the day, most of the fintech, we are not here to open up branches and buildings and throwing big monies on and the infrastructure side, rather than virtual digital infrastructure, digital customer acquisition, digital servicing. That means that digital trust, digital identity, digital protection, on how you build the the legacy banks have given the confidence. If you have a problem, come to me. I have a branch. I can sort it out. That physical trust need to be replaced with the digital trust. I don't care where are you. You will solve my problem, and I need to provide the same trust level. You don't care where is my office. You will get resolved if you have a problem. Your money is safe with me, and if you need assistance in a few minutes time, you can reach out to me and I can able to assist you. That is the big win for future existence of fintech. Otherwise, yeah, everybody can start with a new idea, innovate it, but end of day, its success is with the customer hand, because it's not about CAC, right? It is about servicing. How long I can service efficiently and hold customer trust. And this is where the differentiation for long-term fintech success linked to it. And yeah, I think if we can hold these 4 5 parameter on top of it, Manu, Ranjan, and reason points, and I think nobody can stop Southeast Asian fintech growth. We are going to be multi-trillion-dollar business.
Interesting. There are some common themes that I can pick up: use cases, sustainability, people, culture, and there are some diverging views around: do you need that brick and mortar trust emphasized, or is it the digital identity comfort that you need to drive? So I think very interesting perspective. I think the last question was probably a bit more divisionary, and I didn't expect it to be, but it was very interesting to hear all these different point of views. So Ramu, Rajan, and Allison, I think that was the last question, and I've definitely learned a lot during this session, and some really interesting exchange of perspectives that I would carry forward with me. I'm sure that was the case with all of you as well. Any closing remarks from all of you? Thank you from me for taking this time out for engaging in this really wonderful discussion.
Thank you.
Thank you. It was really engaging discussion. Thank you. Really enjoyed.
Thank you, Shika. And thanks,
All right.
Manu and Ramu.
Thank you, Shika, Manu, Allison, Ramu, for that really insightful discussion. If you have any questions to any of our speakers, since their session has ended, you can just reach out to them directly by looking for their names over at the People tab, and I'm sure they'd be more than happy to answer any of your questions. Thanks again, everyone.
Thank you, Jed. Thanks,
Thank you.
everyone.
All
Thank you
right,
very
Thank
much.
so
you.
that
Alison,
is a
Manu.
wrap for our FinTech Tomorrow track. We're going on a quick lunch break. So we still have two more tracks in the afternoon, and the first one will officially start at 2 p.m. Singapore time. See you all later.